Should you protect your retirement savings with long-term care insurance, or should you solely rely on your investment savings? Well, today we're going to be helping you answer this question for yourself in our Tuesday tip, so stay locked in. Hi, my name is Carson Graves, certified financial planner and president and CEO of the Retirement Education Center, and I want to welcome you once again to our Tuesday tips, where today we are going to be talking about a very important retirement planning concern for many retirees, and that is, how do you prepare for long-term care expenses? Should you rely on a long-term care policy, or should you simply rely on your investment savings to cover this particular expense? Well, we're going to talk about that here in our Tuesday tip, so let's go ahead and jump into our lesson today. So when it comes to long-term care insurance, this is basically an insurance that will cover the costs that you cannot typically have covered by your other health insurance. Now, this would be a cost that is typically associated with your daily activities such as bathing, dressing, or eating, and that's whether a nurse is coming to you or if you are in a nursing facility. Now, the advantage of actually having a long-term care policy is that it can actually help protect your retirement savings from being depleted due to the high cost of long-term care. Now, many studies show that 7 out of 10 people, or basically 70% of us, age 65 and older, may have some sort of long-term care need. And the typical cost for long-term care on the low end can be anywhere from $5,000 to $6,000 per month to as high as $10,000 per month to cover for that need. So what are the advantages of actually having a long-term care policy? One, if you do have a long-term care policy, any distributions that are paid to you due to that long-term care need will come to you tax-free. Also, by having a long-term care policy in place, it will allow your retirement savings to remain solvent. And of course, if you do not have to touch your retirement savings to help cover any long-term care needs, it can help you potentially avoid any high tax consequences that can come from that. Now, of course, with any retirement solution, there are some disadvantages that you may have to consider as well. And when it comes to long-term care, one of the disadvantages is that you must have good health to qualify for it. Yeah, insurance companies are not just handing out long-term care policies. They're going to evaluate your health to make sure that it's prudent to even insure you for a long-term care policy. Beyond that, if you are qualified to get a long-term care policy, the high cost of the premiums could also be a deterrent. So many people who look into long-term care, this is one of the main reasons why they do not get the coverage that they need, is because of the cost of this particular policy. And the last disadvantage of certain long-term care policies is the use it or lose it scenario. This is not the case with all policies, but there are definitely certain policies out there that all you would do is pay the premiums, and if you never get sick or have to use that policy, all those dollars you've given to the long-term care insurance company. Understand there are other hybrid options that you might want to consider, and you're going to want to speak to a certified financial advisor who can help you in this particular area. Now let's talk about, would it be better for you to use your investment savings to cover long-term care expenses? As we have noted in this video, some individuals may simply choose to rely solely on their investment savings to cover long-term care expenses. Now, this particular individual may decide to do this simply based on the fact that they can avoid paying those high premiums for long-term care and invest that money for their long-term retirement goals and continue to increase their wealth, and of course, using those dollars to cover any future long-term care needs. Now, an individual who may decide to utilize this particular strategy may know that they have a history of good health and they have a high risk tolerance as well. So let's go ahead and talk about the advantages of utilizing a strategy like this instead of actually having a long-term care policy. As I mentioned, you would eliminate the high cost of the premium payments that you would have to pay for having a long-term care policy if you decide to just utilize your own investment savings to do this. You would also eliminate the use it or lose it factor. If you're putting money back for your retirement savings and you're increasing your wealth, if you never have a long-term care situation, all of those dollars would be passed on to your estate. And last but not least, yes, you could potentially grow your wealth more by putting money into your investment savings because you're avoiding those high premiums. And as I mentioned, that could be really good for your beneficiaries if you're able to do this and avoid any major long term care expenses during your retirement years. But of course, with this particular investment strategies, there are some obvious disadvantages that you have to consider. And one would be that if you happen to have a major health issue, in which they say 7 out of 10 people will have some sort of long term care issue, it can wipe out all of your retirement savings. I have worked in this industry for 24 years and I've seen this happen, and it is not good for that individual. And of course, it's not good for the beneficiaries as well. Another issue that many people may not consider or think about is that if they do have to go in and take money from their retirement savings that are taxable, it could really increase your overall tax bill. It could cause up to 50% or up to 85% of your Social Security benefits to become taxable. Also, it could cause your modified adjustment gross income to be increased above any IRMAA thresholds for that particular situation as well, which could cause a major increase in your Part B premiums and your Part D premiums for Medicare. So the overall moral of this video is that when it comes to trying to protect your retirement with a long-term care policy or utilizing your retirement savings, there is no one size fit all. Of course, it always depends on your individual circumstances, your individual retirement goals, and your risk tolerance when it comes to this particular question. Please note that these videos are created for educational purposes only, and that you should always seek out your own financial advisor, your own tax advisor, and your own attorney regarding your personal situation. Also, if you are looking for an independent fiduciary advisor to help you with these types of complex financial matters, we highly recommend that you utilize the links in our description below and go ahead and schedule a 1-hour free consultation with us today. And we will also like to hear from you. Let us know what your thoughts are regarding this particular subject matter and leave any questions or comments in the section below. And if you found this information to be beneficial, all that we ask is that you subscribe to this channel so it can continue to grow, like this video, and share it with others.